Welcome back to another weekly price action review. We're going to get straight into this one, but just as a quick sort of overview, I think this week's price action, interestingly, was probably very easy to understand, but potentially quite difficult to actually profit from per se. I think there were opportunities, but you had to be extremely nimble to do so. But nonetheless, this is a weekly price action review, so I'm going to discuss my views of what I saw in price action this week, how I came to the conclusions that I did, and ultimately why I came to those conclusions in terms of what price action was showing, and so on and so forth. So, with that being said, let's delve straight into this on the weekly time frame. Fortunately, I don't have a cup of coffee with me, so I wouldn't take my customary slurp. But nonetheless, let's get into this. I don't think this one's going to be a long one, but hopefully, again, you will take some things away from this that can help you in your own journeys as much as it helps me in mine. Okay, so as per my weekly analysis, I noted how we had this bullish inside candle. Okay, inside candle because it's inside the high and low of the previous candle, following last week's price action. Okay, and following the previous week to it, we had this candle here, whereby we had, just annotate it now, we had purged that low and closed back inside. So we rejected the low and closed back inside, and then we had this indecision candle with a bullish close. So my initial outlook for this week was to see a continuation of higher prices. Now, I believe there was SMT at the lows here, which also was a catalyst to initiate this price move higher. But ultimately, I was looking for a continuation of higher prices targeting the weekly imbalance, the weekly fair value gap here. And also the weekly volume imbalance. Okay, so what we noted was this occurred during the early part of the week, whereby at that point I would want to see a high time frame cracking correlation form inside of this SIBI weekly, or bearish fair value gap, should I say weekly, which would then provide us with the context and bias to then target this old low weekly. Now, depending on the time frame that the cracking correlation forms will determine exactly what is the likely near-term drawn liquidities that we can target. So ultimately, it was a case of the rejection candle here, this inside candle on a bullish close, supporting the idea that we could still trade higher. We traded higher into the SIBI weekly, and then from the SIBI weekly, waiting to see if there was a cracking correlation at the highs to support the idea of lower prices, which there was, and which initiated this move lower, but not trading to this low. But I would envisage that we will purge this low, and if we see this low purge on a closing basis, then we'll be tacking this this monthly low down here. Okay. So moving on to the daily time frame. Let's just clean. Let's clean this up. We're just going to go to the 4-hour second. I just want to clean some of this up so we can see the daily time frame pretty clear. Okay, there we go. Looks better. Right. So again, following the weekly commentary, I'd outlined that I was anticipating higher prices. So on Monday, we see this expansion higher. We did have high impact news on this day, but we see an expansion higher immediately to the volume imbalance and the bearish fair value gap. Okay. Now, we then see this consolidated day. However, it does trade above the previous daily high. Not a large ranging candle at all. So we have this candle here where we trade deeper into this um, bearish fair value gap, weekly bearish fair value gap. So you can see we don't trade up into CE of this imbalance. Nonetheless, we did trade inside on a closing basis, so one could assume that we would see higher prices. However, once we traded into this level, we note, or certainly I noted, the high time frame cracking correlation between Tuesday and Wednesday at the highs. This formed a lower high, whilst YM formed a higher high. Very, very minute, but it is there. And we'll see this in more closer detail when we drop down to the 4-hour time frame. And this set the stage for lower prices, and then we see the market displace lower here, and ultimately from the displacement from Wednesday and this indecision candle on Thursday, we are left with this bearish fair value gap, daily bearish fair value gap. Okay. Now, following the formation of this daily bearish fair value gap, and also this volume imbalance here, daily volume imbalance, this indicated weakness to me. Weakness, and the fact that this fair value gap was not traded to as of that point indicated that the market was weak, and we could likely see the market reprice lower with speed. Now, because we had a high time frame cracking correlation here, now in my opinion, it's a 4-hour cracking correlation here, but nonetheless, based on the 4-hour, we would have had the new week opening gap here, and various lows, but this old low daily would have been the likely old low daily, more so previous weekly low, depending on which asset you're looking at, was the high time frame draw on liquidity. So once we'd also created this fair value gap here, that in itself indicated and supported a flip or switch, if you will, to bearish price action, or bearish order flow, should I say, in alignment with the weekly time frame. So that's supporting high probability shorts. Anything that is framed short should be high probability, specifically if we have a clear drawn liquidity here and potentially down to here as well. So obviously, as I said, we had this breakaway gap form here, and that was also supporting the idea of lower prices and with speed. So we see then on Friday the market expands lower, purging that near-term high drawn liquidity in the form of the old low, and then trading to and through, closing prior to the old low weekly to close the week. Okay, so we'll drop down to the 4-hour, try and expand this a little bit, see what's going on. So we don't really need to delve into all of the detail, but we know how the market opened on Monday, repriced higher, straight into the volume imbalance and the weekly bearish fair value gap, formed the high of day. Okay, then we see the confirmation of the true week open, which is important. And then the market essentially consolidates but reprices higher, purging the previous daily high and also setting Tuesday's high of day. Okay, and then we see this consolidation here. The market is trending higher, but ultimately it's in the consolidation. Right. So as we then come to Wednesday, we note how, if we're looking at Wednesday, the market trades higher, so we're above the true week open, so high probability shorts territory if we see a cracking correlation within this region. Okay, and then the ability to frame a trade. So within here, excuse me, scratch my ear. So on Wednesday, we know how the market trades high but fails to purge Tuesday's high. And then we see, so trades higher, fails to purge this high, then we see this displacement lower, leaving this very thin imbalance, this 4-hour bearish fair value gap still there. The market then reprices higher here, where we note this PDA SMT with NQ at this fair value gap. So ES traded through the fair value gap and rejected, whilst NQ failed to trade to its fair value gap, whilst at the same time we had SMT at the highs with YM. Okay, now for reference, either or can take place here. However, that cracking correlation at the same point with NQ, so where we had the PDA SMT and the high time frame SMT form. Now I'm pretty certain that they may. No, I think they're at the same time. Would probably, even though we have the confirmation here, we probably want to focus on the PDA SMT because it's with NQ, so it's high probability. But ultimately, this set the stage for lower prices. As I said, the market formed this higher time frame cracking correlation as well, high time frame SMT, setting the stage for lower prices above the true week open. The market then displaces lower aggressively, so we see this rejection and then this aggressive candle here, and it trades down all the way to essentially this new week opening gap. But whilst we have this high time frame displacement, we ultimately leave this bearish fair value gap. Now that in itself is confirmation, as much as this is here. This pretty much is confirmation up here, but this is just confirming everything, that order flow relative to the H4 time frame is bearish. So now we have the weekly, daily, and the 4-hour all supporting bearish price action, which is important. And that supports the idea of the market trading lower to the near-term high time frame drawn liquidity in the form of the previous weekly low / old low daily. Okay, so following this displacement lower, the market then consolidates, trading higher into this bearish fair value gap, this H4 fair value gap. Okay, but we note, or certainly I note, number one, all three members did this, so there was symmetry in price action here. And I also noted how the bodies of the candles did not trade into here, supporting the idea of lower prices being very likely. The market rejected from this H4 bearish fair value gap, where we see the rejection, then this consolidation here, before then aggressively displacing lower through previous daily low, and then continuing lower to the old low daily, to close the week. So as you can see, if we just move this down, there you go, old low daily, and then it continues on towards the old weekly low, but doesn't quite get there. So high time frame, that's the elements. Okay, I'll just drop down for visual of the key elements here. So obviously, as I noted, let's enlarge this a little bit, then we'll pop to Friday. So on Tuesday here, as I noted, how the market reprices higher, fails to take out Tuesday, this high here, which is Tuesday's high. We then see the market displace lower. We have this H4 bearish fair value gap. Market trades higher, converging SMTs, purges the London high creates this SMT, as I said, converges, and then the market completely displaces lower. Now, interestingly, I just want to just check something whilst here with you guys. Let me just see. Yeah, it's fine. Okay, so that's ultimately there. We had that conversion of SMTs. That's extremely high probability above the true week open. Okay. And then the market trades lower. And then we come into Friday, whereby, again, we had confirmation of lower prices following the market rejecting symmetrical price action, rejecting from the CBH4 or the bearish H4 fair value gap, whichever. Heading into this day on Friday, market displaces lower, leaves this bearish H1 fair value gap. The market trades up into it, symmetrical price action. Got a small cracking correlation here. It's not something that I can use, but obviously other people have models in which they are able to profit from that. But ultimately, I couldn't. I wanted to see a purge of this H1 liquidity pool here, or the London high, either or, with the bodies of the candles respecting this CB, and then I would have been in short, absolutely. But unfortunately, that wasn't the case, so it was no trade for me. But they were predominantly the 2 days where, to me, appeared that there were opportunities, and certainly people profited from that. So a good week all round. But that ultimately brings that to a close. So again, as I always mention, I always say, it's now important for you to take a step back, look at what were your key points, your key takeaways that you can document, you can embed into your trading models, your trading journals, your trading plans, whatever, which is ultimately going to help you improve as a trader. Super, super important and must always be done. So on that note, I'm going to leave this one here. Hopefully you guys have enjoyed that. Hopefully there was some stuff that you could take away. If you have any comments, any questions, should I say, just place them in the comments. But I'm going to leave this one here. Hopefully you enjoyed it. Hopefully you took something away. And hopefully you continue to journal and keep progressing and moving forward. And we will progress and move forward together. So on that note, I'm going to leave this one here. And as always, guys, I'll catch you next week on the next one.